Welcome to all our members. ICAI Sheetal Sharma on behalf of Bhayander CP Study Circle feels very delighted to welcome all our members to our 28th VCM for the financial year 21-22. We also acknowledge the presence of our speaker, Sir CA Bharat Kumar ji. Welcome, sir, to our study circle. As they say that the law without penalty is only an advice. So with this, we have our first session on income tax penalty under section 270A. And sir will be taking us through this sections. Before we begin with our technical session, I request our convener madam to please give an opening remark.
Thank you, Sheetal. Hello, everyone, and welcome to today's session. It gives me immense pleasure to extend a very warm welcome to all of you on behalf of Bhayander CP Study Circle. I hope you all are good, in good health and are safe during this pandemic period. Members, our today's VCM is very special because both the speakers are our study circle members. We welcome you, Bharat ji and Shashank ji. Friends, with the growing technology updation and automation of various functions around us, soon there will be a need for us to be on forefront with upcoming cases, litigations, and new changes with aim to have enlighten us. We have with us CA Bharat Kumar ji for first session. Our first session is on section 270A penalty for underreporting of income and misreporting of income, and the second one on e-commerce industry. During this pandemic period, e-commerce industry have transformed the way business is done in India. So in this new era, there are huge opportunities for chartered accountants. Our own study circle member, CA Shashank Sah, will throw light on the topic. I'm sure members would be benefited with the knowledge shared by our speakers. Thank you so much. Over to you, Sheetal. Sheetal, you are mute.
Thank you, Ritu madam, for your words of wisdom. Indeed, with these changes in the business dynamic and technologies, it's very imperative for us being a chartered accountant to seize the opportunity around us. And for this, we have very learned speaker, CA Shashank Sah ji with us. Welcome, sir, to our study circle. Before we begin with the technical session, I would request all our members, if they have any query, please post them in the chat box so that they can be addressed. Now I request our coordinator, CA Kishore Mehta ji, to please give an introduction of our first speaker, sir. Kishore ji, over to you.
Yes, am I audible?
Yes, you
Hello?
Yes.
Yes.
Okay. Thank you for giving me this opportunity, Sheetal and Ritu. CA Bharat Kumar ji is a commerce graduate. CA Bharat Kumar ji is a commerce graduate. Hold on, please. CA Bharat graduate from Jain Nayan Vyas University, Jodhpur 2012. He has completed his Master of Economics from the same university in 2014. He enrolled as a member of ICAI in March 2017. He also has been working with well-known chartered accountant in the field of litigation with Income Tax Department and represented various cases before Commissioner of Income Tax Appeals, Commissioner of Income Tax Exemption and Investigation and Income Tax Investigation Wing and Income Tax Appellate Tribunal. He has also represented cases before GST Department also. Presently, he is working in the field of income tax litigation in guidance with Rajendra ji, ex-ITAT member. He has undergone a post-graduation course conducted by ICAI for Diploma in International Taxation at Thane, Mumbai in 2018. With this, I would like to welcome Bharat Bhai. Bharat Bhai, the dice is yours.
I am audible?
Yes, Bharat Bhai.
Yes, Bharat Bhai.
Good morning to Bhayander History CP Circle. I am first of all thankful to the Convenor and Device Convenor. Both are the female member, CA Ritu ji and Sheetal ji, they are giving their precious time to our CPSTD circle. So we all are thankful to her. So my topic is the underreporting and misreporting of income. First of all, I want to say that the concept comes from the America, that is called US. So the every law is borrowed law in India. So there is no manufacturing in India. The main concept is borrowed from the outside the India, or they are modified and implemented in India. So first, the IRS, International Revenue Service of US, has this concept of misreporting and underreporting. They make a simple, very simple concept, and they use it in their law. But in India, they borrowed those sections and make them some complicated sections in India. So this is a simple. The only constant in life is changes. So we are also in a virtual conference due to the changes. We never think in our life that we will go for the virtual conferences for the CP Street Circle, but time teaches us for the changes. So in India, anywhere in world, the law is amended time to time as per the requirement of the situations. So in Finance Bill 2016, the Honorable Finance Minister realized that the Indian penalty provision under Section 271C, which was for the concealment of income and furnishing inaccurate particular, was not rationalized. So to rationalize those sections, 271(1)(c) sections were deleted and new sections was 270A was inserted. So the finance ministry words was we want very objective, certain and clear. It means the past section was very ambiguous. There was so many litigations and there was no clarity. So department was also facing the revenue losses. So they inserted sections 270A to make them clear provisions so that the assessee will be happy and department will be happy, and make the certain defined instances of the income. So why the penal provision is necessary? So the Vancho committee says that the penal provision should not be draconian. It means so it should not be so strict that the assessee will be killed. So to reform the assessee, to improve the assessee, to make them to realize that they can make mistakes. So mistake cannot be penalized to the elimination of them. So to teach the lesson to those assessees, the penal provisions are there in every act. Now the new provisions in Finance Bill 2016, it means it will be applicable from financial year 16-17 and assessment year 17-18. So still the 271(1)(c) concept will be there in our law for a long time, because there is a cases where the reopening cases are there where the earlier year also opens. So 271(1)(c) concept will be also remember for the 4 to 5 years, 6 years, and new concept is also remember for onwards. So I want to say that the 270(1)(c) concept will be always available for those cases which is not decided by the CIT appeal for the earlier year. So once the CIT appeal pass the order, so AO has to levy penalty under section 271(1)(c). So the 271(c) is not abolished for the earlier years. It will be applicable for the earlier years, and for assessment year 17-18, 270A will be come into picture. So specific year have a specific sections. So if you are referring those years, use those specific sections. Here is some comparison has given by me that what was the earlier provisions and what is the new provisions. So first of all, I want to say that the old provisions have a two limbs. Limbs means they have given the some particular instances, so make the income increases. The first instant is that has the conceal the particulars. It means you have a hide something in your return which make your income increases, or you furnish the details, mail details, inaccurate details to make your income reduces, then after department find that you fill up the inaccurate details, so they increases income. So in new provisions, there is a no limbs concept. There is a simple concept is you have a underreported income. It means you have shown 100 rupees and department take it is a 150 rupees. So differences of the income is underreporting of income. In earlier provisions, there was a penalty provision 100% to 300% of the income. So there was a pure discretions. There is a no specific criteria in which cases 100% should be levied, in which cases 300% should be levied. Even if assessing officer want, he can make the 200% as penalty. So there was a ambiguities. There was no satisfied conditions that in which cases 100% will be applied, in which cases 300% penalty will be applied. So all the assessee are in a one basket. So they are facing the certain problems. So new penalty provisions, there is a specific conditions. If you have a under reporting of income, which is not due to the misreporting, then simple, you have to pay the penalty 50% of the tax. And if you have a misreporting of the income, or those reasons you have underreported, then 200% of the income will be your penalty amount. Assessment year is as already explained. The since assessment year 16-17, all provisions are there, and since assessment year 17-82 onwards, the new provision 270A is come into pictures. Now the penalty old provisions need to be abolished. Why the government feel that the 271C penal provisions are not good? So first of all, that the government has loses huge money in the old provisions because of the mistake of the officers, because they was not properly trained. So they loses the huge money, because once the assessing officer apply the concealment of income, but assessee shows this is not my concealment of the particulars, this is inaccurate particulars. It means the assessing officer was himself confused about the limbs, and you are applying the wrong limbs, and those benefit is given to the assessee. And second is, there was a notice problem under section 274 in which the assessing officer did not tick the right limb. Therefore, there is a crores of revenue has been lost by the department. So the new penalty provisions has been filled by the department. So new provisions come into pictures. Before going the further, there is 3 sections which need to be compared. Otherwise, we will feel more confusion about those sections. So first section, we have to clear that the 271 AAC is applicable from the assessment year 17-18 in a specific cases. So our under 270A, certain exclusion has been given, that if the income pertain to specific income, that is the section 68, section 69, 69A, it means the unexplained credit, unexplained investment, unexplained money, and unexplained hundi repaid or received. In those cases, the specific section will be applicable. So 270A will not be applicable. It means the department has given the specific sections for the additions made under section 68, 69, 69. And there is a different penal provisions. So 270AAC for the specific income has been considered by the department. Was those cases, the penalty amount will be the 10% of tax payable. You are surprised that the in underreporting income there is a 50%, here is a 10%. But in specific income, the tax rate is very high. That is the 60% of income. So the penalty provision is still higher in the specific incomes. In the search cases, 271 AAB given the specific provision that where the 271 AAB for the search cases is applicable, 270A and 271 AAC will be not be applicable. It means that this search cases section 271 AAB will override the both the sections 270A and 271 AAC. and tax rate is given in the search cases is 30% of tax and 60% of tax. It means they're given a condition that in the search you have admitted everything, you are paying the taxes in on time, then you have to face the 30% of tax as a penalty. Or in such cases where you did not admit it, you did not pay the taxes, at that time the 60% of the tax will be the penalty. Now the important concept that who will levy the penalty. So the act has given the specific power to the officers who can levy the penalty. So before that, I want to explain some things. The assessing officers include assistant commissioner, income tax officer, joint commissioner, and deputy commissioner. And they have a power for the regular scrutiny, assessment, reassessment, reopenings. In search cases, in survey cases, they have a power. When the appeal file before the CIT appeal, then CIT appeal have a co-terminal power with the AO. It means whatever AO can do, the CIT appeal can do. Those cases, if the CIT appeal feels that there is a under-reporting of income, so CIT appeal has a power to enhance those incomes. And some cases, if the AO passed the order which is erroneous, which is passed prejudice to the revenue, it means that there is a departmental loss and AO did not apply their mind. So the principal commissioner or the CIT, who is a senior person of the AO, have a revisional power under 263(3). So there should be a 3 instances, 3 officers. At that time, it can be found out that there is a under-reporting of income. So at the time of assessment, assessing officer has a power to initiate the penalty under section 270A. In the CIT appeal cases, where the CIT appeal enhancing the income, then he has a power to initiate the penalty. Even before the 263 cases, where the revisional order passed by the principal commissioner, at that time he has a power to initiate and levy the penalty under section 270A. Now the one of the best thing I want to explain that we are receiving the intimation from the CPC. Nowadays the 143 one order is a very lump sum orders, and we are receiving in lots of orders. On those cases, the income differences is also calculated. So at that time, we will levy your penalty or not. This is a simple that the central processing unit does not given power to levy or initiate the penalty. Therefore, the CPC order does not come under the pictures of 270A. Now we analyze the penalty provisions, and we see that the penalty is mandatory or a discretionary. Generally, the penalty is for the reform the assessee, so that there has been discussion given. There may be a chances for underreporting. There may be many reasons for underreporting. There may be a genuine reason for underreporting. There may be a opinion taken from the experts, which is not a correct. So the law use the word the may. The officers may levy or initiate the penalty. It means the discretion has been given to the officer to levy the penalty. So I am referring the one case, the apex court in Mansukh Lak versus CIT, where held that the penalty need to be imposed when there is a minor breach of law having regard to the fact end of the justice required, the assessee need not be penalized. It means in every cases the assessee need not to be penalized. In certain cases where it required to penalize the assessee, then penalty should be initiated. But department is taking view in every cases to levy the penalty, which is not good sign of the good sign for the assessee and taxpayers. So department has to select it to those cases which actually need to penalty, and actually they should be penalized. On those cases, the penalty should be levied. If there is a genuine cases where the penalty should not be levied, so that the principle of the Supreme Court in the Mansukh Lak CIT always be available for new provisions. Second case is the Hindustan Steel versus State of Orissa. This case is very much used in the ITT by the Samim Sah, the ITT member. He don't like penalty for the assessee. In many cases, he deleted the penalty. Assessee is paying the taxes. Why the again penalty? You are leaving the penalty. So he, in case there is no chances, there is no hope to no hope for deleting penalty on the merit. So Sami Mia have used this Hindustan Steel for those cases and held that the penalty cannot be levied for the merely technical or venial breaches. It means they have a view that the Income Tax Act is so complex. We are CA, we don't know the each and every sections. We still fighting with the act. So a common one cannot be expected to know the income tax law. So on those cases, the penalty should be not be levied for the interpretation of the cases. Now we are dealing with the 270A for underreporting and misreporting of income. The basic questions comes in our mind that the what is underreporting, what is the misreporting, what will be the quantum of the penalty, when the penalty should not be levied, when penalty should, what was the remedy available after the penalties order comes, and what need to be in our mind, basic principles while we are dealing with the penalty cases. So first of all, I want to kind your notice to the sections 278(2). In previous penalty, there was no specific instances were given in which cases you have a underreporting or misreporting, you have a exit income, less income. But in the new provision, there is a clear-cut specific provisions has been given that A, B, C, D to G cases are considered as a underreported income. It means the first instance says that we are filing the return. After filing of return, we are receiving 143(1) intimations. That intimation may be equal to our return income or may be increased to our return income. And thereafter, in case the assessee is selected for scrutiny, then assessment will be happened. At that time, the first assessment order passed by that is called the assessed income as per the assessment order. Later, the case may be again reopened and next orders assessed income may be there. So there is be certain conditions in a company cases, and in specific cases, there is a calculation may be changes due to the 115 JB's calculation, that is the book profit differences calculations. So there may be differences in the book profit and return income profit. So there has been the instances have been given that these income will be unreported income. So I explained the each and every point in very clearly in next slide, how we calculated the underreported income. So further, so first of all, I want to submit that the first we file the return. After return, we received a 143(1) return. So the Income Tax Act says that there is no meaning of the return income. There is only meaning of the income as per the intimation received from the CPC and the assessed income. It means you have to calculate differences between the CPC order and the assessment order. So you calculate those differences and count your underreported income. Suppose you file the original return and certain income left to be contributed in the original income. You file the revised income. Then again you receive 143(1). So there is a differences between the original return or revised return. Those cases still not fall under the underreporting of income. So you may be a 143(1) order, two intimations will be there. So latest intimation should be considered to compare with the assessed income. So this is one example. If a assessee has filed the return income of ₹5 lakh. Later, he received the intimations under section 143A of 6 lakh rupees. Here is a differences of ₹1 lakh. So for the penalty considerations, this 1 lakh rupees is not considered for the penalty. Then thereafter, your assessment is made under section 143(1), 143(3). It means the regular assessment is done or your income is determined 8 lakh rupees. Now, at that case, the underreporting income will be the differences between the intimation income and the scrutiny income. It means the 6 lakhs minus 8 lakh minus 6 lakh, 2 lakh will be your underreported income. So there is no comparison of the original return, revised return. It is only comparison between the intimation income and the scrutiny income. Second thing is that your case was again open and your assessed income changed to the 10 lakh rupees. Though in first instance you already already facing the penalty provision of 2 lakh rupees due to the regular scrutiny, and now your underreported income will be calculated differences between the latest order and the earlier order. It means that you compare both the assessment order and find out the differences. This will be your underreported income. This is a simple concept that the income should not be considered double for penalty. So the differences has been given. Okay, what will be differences of the underreporting income in the two circumstances? So in examples, underreported income is the 2 lakh rupees. Tax payable on underreported income is the 30% of 2 lakh, it is 60,000 rupees, and penalty leviable it is the 50% of tax payable equal to 30,000 rupees. Here I consider that the penalty is levied due to those cases which is not considered under the misreporting. Now the cases where return has not been filed. There is a many cases where return has not been filed and order has been passed. On those cases, we are segregated those cases in the two categories. One category is that where we get the basic exemptions, and those cases where we does not get the basic exemptions. It means in individual HUF trust cases where we got the basic exemptions, so you calculate the assessed income. It means there will be no return, so their return income will be 0, and assessed income will be 100. So the differences between the 0 and 100 will be 0 and 100. In the other than the basic exemption cases, the 0 and 100 differences will be considered for the underreported income. In the basic exemption is there, suppose the basic exemption is rupees 25, then you reduce 100 minus 25 and 75 will be your underreported income. It means the penal provision has given the clear-cut indications where the taxpayer who have a benefit of the threshold limit, the exemption limit. So on those cases, those amounts should be excluded for the underreporting of income. This is the case, one of the example as given there, where the basic exemption limit is at 2,50,000 rupees. So assessing officer scrutiny reopen your case in the scrutiny and made a 10 lakh rupees additions. Now you will calculate the underreported income will be 10 lakh minus basic exemptions, that is as considered the 2,50,000, and 7,50,000 rupees will be your underreported income. Now the tax payable on the underreported will be the 7,50,000 into 30 is equal to 225, and penalty leviable is 50% of 225. It means the 1,12,500. So there is no reasons to find out the figures. It is only a concept matter. They simplified the concept. Which cases the underreported will be considered, which cases what amount underreporting will be cases. Now the cases where the assessment and reassessment has been passed, it means the legislature given the clear-cut intentions that the one income should be considered at a one point of time for one penalty. So I earlier explained that there will be a differences between the latest order and the earlier assessment order. So the differences will be calculated for the underreporting of income. So it is all a game of the differences. You calculate the differences and find out the underreporting of income and the calculate the tax and levy the penalty. In the book profit cases, you calculate the book profit and you are in how much differences are coming and how many differences are coming, and you act accordingly. You calculate your underreporting income accordingly. This is a case of the firm where the 30% of tax rate is applicable. So a firm file is written of rupees 1 lakh rupees. He received his intimation of 1 lakh 10 lakh rupees, and assessment was reopened, and it was considered 1 lakh 60,000 as a assessed income. Now the assessing officer will calculate the under reporting provisions, and the assessing officer will compare the intimation income less the assessed income. So 50,000 will be their under reporting income. If in the firm cases the case was reopened, then 2 lakh will be the assessed income. So under reporting income will be the latest order less earlier order. So the 40,000 will be the under reporting of the income. So there in earlier there was a confusion in the loss cases, but in 271C sections there was amendment that in loss cases, in case the loss was reduced, in case the loss was changed in the profit, then the differences of those amount will be considered for the concealment of income in the earlier sections. So then those same principle has brought down in these sections in cases of the loss. So in suppose a company is filing a loss return of rupees 100 rupees and is determined loss is the 90 rupees. Now the assessed loss is the 40 rupees. So your under reporting income will be 90 minus 40 equal to 50 lakh rupees will be your under reported income. So here I am explaining one extraordinary situations where a company is a continuous losses. They are not taking a loss benefit in the subsequent years. On those cases also consider the under reporting of income not. So in the bona fide situations, there may be the penal provisions may be considered the tax neutral and there is no benefit to the assessee. So penalty may be deleted. On that ground, the assessee does not get benefit of the tax revenue. So if your case was again reopened and assessed income comes to the positive 20, so you calculate the differences of minus 40 and 20. So your 60 will be income for the under reporting income in the assessment cases. So quantification of the penalty. So there is a two quantification given, which is already explained that 50% of the under reporting, which is not due to the misreporting. If you are under reporting due to the misreporting, then 200% of the income should be considered for the under reporting penalty income. So the act has given the clear cut provisions ki what will be the misreporting of income, why the income will be considered due to the misreporting. So they given the instances. Oh, one second. So Act has given certain instances where the misreporting can be considered and it will be considered. So I given a one chart, but I explained in the each instance in the separate sheet. So first are the misrepresentation and superstition of the fact. So misrepresentation means that you are making some representation before the authority, you are making some claim which is false, which is called the misrepresentation. In a simple example, your SSC is covered under section 44 ADA, and in 44 ADA you have to offer 51%, more than 50% as a profit. But to save the taxes of the SSC is taking his business descriptions under 44 AD and he reduced his profit 8% and he filing the return. In case the case was open, then there is a very good chances that assessing officer will levy the penalty for the misrepresentation cases. It means that you have underreported income by applying the wrong section. So those time you can face the penalty of 200% of the underreported income. Second thing, you are taking the benefit of the additional depreciation by claiming the wrong details. It means you are taking the wrong dates in your return of income. So you are taking the more benefit, you are taking the wrong head, you are taking the more benefit. For those cases also consider is a misreporting of income. So second thing is that when the disclosure of the fact is not required by the law, it is comes under the misreporting or not. So I am giving the simple example. We are filing the income tax returns where the income is not more than the 50 lakh rupees, then we are not filing any personal asset details. So those cases is also not covered under the misrepresentations. Where the income is more than 50 lakh rupees, but you are not saying your personal asset, those cases may be covered under the misrepresentations of the income. Now you are supersetting something and supersetting the facts, and you are making your income less. Suppose as per the ICDS, you have shown the profit, but you are not applying those ICDS, and you are taking your income underreported. Those cases also cover under the supersession of fact, and you may levy the penalty of the 200%. Second is a failure to record the investment in the books of account. So you are making the some investment and you are not showing your books of account. On those cases, so the section is very clear that you have to maintain the books of account and you have failure to record in the books of account. When assessee is not required to maintain the books of account, those cases will not cover under this clause. So for the showing you are making the fixed deposit, the fixed deposit is shown in the 26 AS, but you are not taking those fixed deposit in your account. Due to that, your income is underreported. On those cases, you will cover under this section and you can faces the penalty of 200%. Suppose you purchase the shares and which is not shown in your books of account, which is shown in 26 AS, and AI's informations also covered under this clause. So there will be always dispute in future that those investment which is not recorded in the books of account, and you apply these sections, then there is a good chances the assessee will win that the assessee applied the wrong section and I am not falling in that section. Because in 44 AD cases, assessee does not require to maintain the books of account. So these sections will not applicable to the 44 AD and ADA cases. Second, claim of expenditure not substantiated by any evidences. It means you are claiming certain expenses in your books of account which is not supported by the evidences. There may be a chances the lack of evidences, lack of the external evidences. So this section is clear cut given that clear cut that not substantiated by any evidences. It means there will be two cases when you have not giving any evidences. Second is that you have given the evidences which is not satisfactory in the level of the assessing officer. So we remember the Reliance Petro product cases which was held by the Honorable Supreme Court, that whether merely because the assessee has claimed the expenditure which claim was not acceptable to the revenue. It means the department view that the expenses is not allowable. So that itself would not attract the penalty under section 271(1)(c). Though I want to only apply those principle of this Supreme Court decision that while this section was incorporated, I think that the Supreme Court principle has been taken in this section. So this decision will be always still good to apply in those cases which is covered under 278(9)(c). I am giving the certain examples. Suppose you are paying the expenses in the cash voucher for Hale and Hamali. So in the Hale and Hamali, you cannot have a PAN card. Some cases you have only cash voucher. On those cases, it is hard to have external evidences. So those cases is also covered under this clause, and the penalty should not be levied on those cases. You have a bright chances in the appeal. If the addition is made, you have always the plea that I have submitted all the details, but the details are as much as available with me, and there is no possibility of external evidences. On those cases, the penalty may be deleted in this section. I handle the one cases. I am taking the example of those cases in this example. Under 270A9D, it is shown the recording and the false entry in the books of account. So I have handled the one cases where the assessee is taking his professional fees in the books of account but showing as an unsecured loan. So he saw an unsecured loan for the 4 years. Finally, his unsecured loan get to the 1 crore rupees, and he written off in the capital account. And there was no scrutiny, but the case was selected for selected in investigation week due to some other reasons. At that time, we faces this problem that the unsecured loan was not confirmed because unsecured loan was the professional fees. Due to the false entry, the income was not shown in the income. Those cases, still we can face the penalty of penalty 200% of the underreported income. So any false entry which is not a genuine, it means when we want certain consultant doing the journal entry and reducing the profit, he making certain expenses in the fact basis and claiming the any expenditure. So false entry will be considered under misreporting, and if anyone doing this false entries in the books of account, always suggest them do not entry any false entry in books of account to reduce the profit. I handle one cases where assessee has shown the purchase of the land by the false entry, where more than crores of rupees has been shown that the purchase of land. At those cases still will be covered under misreporting due to the misrepresentations, and you can face the penalty. Second, failure to record any receipt in books of account having bearing on the total income. It means skipping the income. Suppose you have 10 entries in your bank statement, you are taking only 8 entries. 2 entries you are skipping. You are not making entry in books of account. You are not showing in the professional fees. In those cases, this also covered under misreporting due to the misrepresentations, and can face the penalty of 200%. So now the remedies, what will be remedy in case the penalty 270A has been initiated, has been levied. So lawmaker always give a window to us to come out from the penalty. If we are genuine cases, if we have a better explanations, then we can come out from the penalties. So the authority, there is a dual condition that there should be a bona fide reasons, and the assessee has disclosed the all material facts to substantiate the explanations offer. It means that you are claiming something and you made the all details before the assessing officer, and those detail was the bona fide. So dual condition has been satisfied, so that the penalty could not be levied. It means that if you are using those windows in which you want to prove yourself is a bona fide, then you should have to prove your case the genuine. Okay, I have a genuine case. I am honest. I did not hide anything. Whatever I submitted before your honor. For the bona fide, you have to prove how you are bona fide, how you are not a malified, how your intention is very good, and you claim the expenses. So before that, I am taking to the Supreme Court case of the Price Water Coppers Private Limited. So you all read in the books that the one of the CA has reported in tax audit report that some amount is not allowable. But while the filing of returns, the said disallowance is not made in the computation of income. Therefore, the assessing officer levied the penalty and the matter went to the Supreme Court. So Supreme Court decided the two principles. First is the bona fide mistake. Yes, it was in the audit report, but not was in the computation. It means there is no intention to hide something. So in its tax audit report, it means that we disclose everything. Bona fide mistake that our staff does not added in the computation, it covered under bona fide. So the principle settle in the PwC cases still hold good and still will be still will give benefit to the new sections. Now the cases will consider as a bona fide. How it is considered as a bona fide? Suppose you have taken some deductions. Before taking the deductions, you are confused that this deduction is allowable or not. You went to some expert. Suppose you went to the retired justice and you explained the all situation to retired justice, and retired justice given a written opinion to you. I am saying the written opinion. There should be a proof that he has given the opinion that your deduction has been allowable. On that basis, you claim something, but scrutiny, the learned AO found that the deduction is not allowable as per law, and later it is confirmed that the deduction is not allowable per law. So you have a always plea that my submission was bona fide. I am not supposed to law income tax law. So I have taken the opinion from the expert, and expert has given the clear cut opinion. On those opinion, I made the certain deductions or claim before the authority and in file my returns. So still you are covered under the bona fide. Second चीज है कि suppose you have some situations and you find some details in your returns and you made some claim, but you made some claim because of the certain decision was available with you. Suppose you have some tribunal decision, high court decision, or any CITP decision, and on that basis you taken a step that on those cases, those circumstances, those decision has been taken on, or my circumstances is also similar. So I have taken the same stand as taken in the earlier order of the any other cases, and you make some claim before the officers. In those cases, you still hold a good ground for the bona fide reasons. Now you change your revenue recognition system. Suppose you are making, you have a builder, or you are making on the basis of percentage completion method, but the cases went to the Supreme Court, or the cases went to the some bigger court, and there is a chances that the review your property may be in your hand, your project may be not completed. So on those cases you postpone the revenue recognition. On those cases you still covered in the bona fide cases, that I have a bona fide belief that I am not showing my sales because I am not supposed to know that my project will be complete or not, because the court may give a decision, adverse decision. So I have paying the taxes on the sales and I am not getting the project completed. So I may be in a loss. On those cases, you still have a bona fide reasons to not to declare your revenue recognition. Second is there will be always dispute between the capital gain, capital income and the revenue expenditure. Capital expenditure and revenue expenditure. So on those cases, you always be also under bona fide belief that I believe that these are the capital expenditure and these are the revenue expenditure. Or those cases also you have a bona fide belief. I am explaining one situations where the still will not cover under reporting income. Suppose you file your income tax return, you show on all things in your income tax returns. On the basis of that, you make certain gross receipt and you paid the taxes. Later, the assessing officer estimated something and not rejecting your books of account, but says that you adopted the project completion method, but I feel that the percentage completion method will be there. You are using the LIFO method, but they are facing LIFO is not correct, FIFO you have to follow, and you made some disallowances. On those cases, the estimation has been changed without rejecting books of account. On those cases also covered under these exceptions and you are not liable for penalty for under reporting of income. Suppose you are making some payment to the relative parties. You mention in your tax audit report that the X has to pay the 50,000 per year. But assessing officer says that the 50,000 is too high. I am saying that the 40,000 will be allowable. So you're making the 10,000 disallowances. On those cases, it is one kind of the estimations. So there is no rejection of books of account. There is no any finding that I claim the fact expenses. So those cases, the penalty will not be levied at all. Now the very interesting cases we are doing in our tax audit report. Okay, suppose we are making the estimation on basis. Suppose you are filing your return, you are showing that the 25% of the expenditure will be in personal nature. But assessing officer says that no, 25% expenditure will not be your personal, 40% will be your personal. On those cases, I am showing the lower estimations, you are making the higher estimations. On those cases, the penalty under section 270A will not be applicable, and there is a exceptions, and we are calling that exceptions. So lawmaker is trying to make some balanced law where the situation may be happened, in which cases there should not be more litigations. So due to the higher estimation by the assessing officer, is still not covered under these clauses. Now in the transfer pricing cases, the transfer pricing transactions is always on the basis of the guesswork. There is no certain criteria, which is fixed, defined criteria. All is depend on the discretions. There are many guesswork done in TP cases. So on those cases, if you are filing all the details before the TP officers, so the penalty exceptions is always applicable on those cases. In the search cases, the exclusion has been given that if the 271 AAB, it means the search cases, the admitted income is there. So this section will be not applicable. The specific sections 271 AAB will be applicable. But in the survey cases, the 270A will always available because the exclusion has been not being given. So a general penalty of 270A will be always be available for the survey cases. Now the general rules for penalty proceedings. So this is the basic understanding that the penalty proceeding and the assessment proceedings are the difference. So we cannot say the assessment order passed, the penalty has to be levied. Suppose your assessment order passed the ex parte order, you did not submitted anything, but you have a still chance to give the everything in the penalty proceeding and the drop the penalty proceeding. So you have all a chance of this filing the return submissions, filing any application for the statement for cross examinations. You have all the opportunities which was available under regular assessment or reassessment, which is also available in the penalty proceeding. So when you are dealing with the penalty provisions, you always think that the penalty and the assessment proceedings are independent, and we have to file the submissions, paper books, whatever papers in a separate forms. Once the order of the assessment is passed, by default the penalty will be levied? No. For the levying the penalty, assessing officer has to pass the separate order, and assessing officer has to pass the separate order, and the mention give the so cause notice to assessee and ask for the opportunity for the hear the honest of the department. If the department saying that you have misreported income due to under misrepresentations, so it is department duty to find out that where I misrepresented the facts. So it is departmental duty to on this one department to clear the fact that how I misreported the facts. Jurisdiction of the levy of the penalty. It means that in cases the penalty cases, the certain approval is needed from the higher authority. If the income tax officer, DC or AC is levying the penalty, then he has to take an approval from the joint commissioner. On those cases, if he has not taken the approval, the penalty provision penalty will be lapsed or penalty will be deleted. The so panel provision should be considered strictly. It not taken as a lenient view, or merely a technical or venial breach is not covered under the penalty, or principle of natural justice is always available to the assessee. It means you have to right to get the show cause notice, you have right to get to file your submission, file your paper book, you have to get the copy of the approval taken from the higher authority, and you have to write, if you have not received the assessment order, you have to write the get the assessment order so that you can file the penalty submissions. So now the challenges in the new provisions. So act is not interpreted like the law makers thinks. It is interpreted when the people thinks. So India may law changes the interpretations and they makes the own views, and litigation started, litigation went to Supreme Court, then the some principle decide. So this sections, the penalty is very latest penalty. There is no decision come here in this penalty. So there may be a chance is the assessing officer calculated the under reporting income headwise, and we are calculated the under reporting income assessment order wise. So there will be a bit always be debatable issue. This is not clear. You have to calculate headwise income or you have calculated the assessment order wise income. So there will be always be different. The debatable issue always be there. Capital gain income versus business income, still penalty provision will be there. House property versus business income always be there. Some cases the assessing officer will try to put into the misreporting, but you always try to first there should not be penalty come into the exceptions. You always try to fill up in the exceptions. You are not falling in the exceptions, then you try to fill up in the under reporting, not due to the misreporting. So there is a chances you find less penalty. So chances of mistake in the order in new penalty provisions, I seen the one cases where the assessing officer discuss the old penalty and levy the new penalty. It means he discussing the assessing officer has concealed the incomes, he made furnished inaccurate particulars, therefore I levying penalty for under reporting. So there may be a chances that the assessing officer using the old provisions and making addition in the new provisions. So first you read the assess penalty order and make things clear that the he has applied the right provision or not. If he has not applied the right provision, you have entitled to make the legal ground, so you can succeed in the appeal. So I have given the some instances. If the under reporting of income by the firm, then the partner should not be penalized. Under reporting of income by the company, the director should not be penalized, because this sections does not given the such chances or instances where the such situations may be happened. If the assessing officer making the estimations, always there is a chances of winning the penalty. Second thing, the 50C additions are there. Suppose you are assessing officer determining your fair value on the basis of 50C provision. So it is a one type of estimation, and you have a always chance to win your case in appeals. So I have given the certain more examples for the not levying the penalty. So how to file the penalty reply? So basic thing is that you have to read all the assessment order first. You have to make your mind very clear, and you mention the fact, okay, my return of income file on this, the intimation of income of rupees this, therefore the assessing officer made of addition of rupees this under the head under reported whatever. And you also mentioned that you invoke the section subsection of this. And second is, if you want to make some technical issues, he does not apply the right provision. So also mention that by invoking the provision under section this, he has invoked the wrong sections and drop provision to me, which is not applicable to me. you also use the case laws of the earlier act of the 271C, where the basic principles are given. So you can use those principles here, and finally you make the prayer. You please drop the penalty, please delete the penalty, and please, I am not coming under the misreporting. I am coming under underreporting, which is not due to the misreporting. So a basic clarity should be has be there in the submissions, so you can get the relief. Now the immunity from the penalty. So if the penalty or has been initiated and assessment order has been passed, so then there is a chances you can file the application to the assessing officer in form number 68 within 1 month from the end of the month in which the order has been passed. And there is a two conditions that you paid tax interest. It means that you paid your demand notice full within 30 days, and you apply for immunity for the assessing officer, and please pray that please give me immunity from the penalty provisions. So you can get the benefit of the penalty amount and prosecution procedure. This is a pure discretion of the assessing officer. So if you file the application for immunity from the penalty, assessing officer will always give the opportunity to be heard, then he will pass the order. Suppose your application accepted, you have not right to file appeal, and your case is stopped. And if you have rejected, you have always chance to file the appeal before the appellate authority. Immunity, for immunity, you can file the multiple times for the multiple years. One assessment year, one immunity application. But for multiple years, you can file the multiple years. Your prosecution will be not launched. Second is the settlement commissioner is not there. So you have to always apply for the immunity for the penalty under these sections, because if you are losing, there is no losing, nothing losing. You are only getting something. And it is very helpful for the small cases where the litigation cost is very high. Thank you for all members. Yes.
Thank you, sir, for this wonderful session, highlighting us on this penalty provisions for Section 270A. I now request our past convener, sir, Nikunj Bangaria, sir, to please.
Sheetal, there may be some queries.
Ma'am, I can't see it. If you have.
1 second. Yes. Narvekar sir is having some queries.
Hello.
Yes, please.
Yeah, Bharatji, very nice explanation for you on the subject of 270A. There are one or two points as regard the misreporting is concerned or underreporting is concerned.
Yes.
First of all, SSC is claiming certain deductions in his computation. Does that amount, and if there is a difference of opinion by the AO, or maybe he take it in other way around that this is not allowable deduction, does that amount to underreporting? Because there is, see, basically as far as penalty provisions are concerned, there should be mens rea or maybe the intention to defraud or reduce the income or misreport the income. Whereas there is no such case, but there is a difference of opinion between the AO that this deduction is not allowed for this SSC. And then he added the deductions, add back the amount, and the amount definitely total income becomes more as compared to the returned income. And then he initiated a penalty proceedings.
Yes.
270A. What is your opinion, sir?
Sir, in difference of opinion, if there is a legal expert opinion has been taken, suppose the one businessman who is a 5 pass, he is taking the opinion from the chartered accountant, and chartered accountant giving his opinion in writing that yes, you can claim this. There is always bona fide belief, and you are always come under the exceptions number 1. Okay, your explanation is bona fide, and you disclose everything before the assessing officer, so the penalty should not be levied. So difference of opinion questions was always available in the earlier act, and now it will be available in the current act, and you will not be penalized in the appeals.
Okay, but in spite of that, they will initiate the proceeding. Then the proceeding will be initiated, and we'll have to fight for that.
Sir, we cannot stop to AO. Stop to AO. We always remedy available to file appeal, and you give your all contention before the CIT appeal. And obviously, if CIT appeal is balanced persons, he will delete your penalty. Otherwise, tribunal 100% will delete your penalty.
Okay. So most of the cooperative cases, we have seen the cooperative, the people, the company, they are sorry, cooperatives are filing the return under cooperative, and they are under that status of cooperative and claiming the ATP deduction. And many times it is seen the ATP has been disallowed to them for any frivolous reasons. There is no basic criteria, because now once it is a cooperative society under the act, it is a cooperative society. No one can delay. Now the status is already there in this thing. But in spite of that, these ATPs are most of the cases ATP, ATP 2D, 1A, and all these many sections there. Disallowances have been made. Either I don't know whether the AOs are well versed with these sections or not, or maybe based on some other grounds they disallow, and they make the huge amount of additions, because the cooperatives, they earn good amount of profitability, mutual concept, and because of that the entire amount get disallowed, and there is a demand, huge demand, and along with the penalty, and there are so many litigations. So this is where we have found that many such cases are taking out 270A, under reporting notices have been issued, penalty notices are issued, and the proceeding gets many days or many months time, and nowadays it is taking too much of time also. So here the only remedy will be to go through that proceedings, or is there any way out for this such type of nuisances are creating? These are basically nuisances, because the SEC is entitled, and in spite of that, such things are not been done by the AO.
Sir, I am facing this problem also. The one of my client has getting more of the crore demands every year due to the ATP2D. I have a own tribunal decision, but only remedy is that you file the application before the Honorable High Court for the early hearing. Sir, or stay application, that my case is covered by these cases, ATP decisions. In Bombay decisions, Bombay tribunals, there are I think more than 15 decisions which is favor of the SSC. If you are taking interest from the cooperative bank or cooperative society, that is allowable under ATP2D. So there is only remedy. Otherwise, you file the petition before the PCIT and CC, and you tell them, please give me early hearing. I am facing the big problems.
Yeah, 1 inch only there. As far as the quantum demand is concerned, they are asking for 20% tax deposit, which is a very substantial amount as far as the cooperatives are concerned, which cannot be deposited by these societies because they are not cash rich that much, and no one is going to take the responsibility. Just a deviation from the topic, but is there any way out for that also? Because this is
only stay petition. You file the stay petition before the assessing officer. Definitely he will reject. Then file before the CIT appeal and the PCIT. Thereafter you file writ petition before the High Court.
Okay, it's a long process.
The High Court definitely will give interim stay and tell the CIT appeal to pass the order within this date. Yes.
Okay, sir. Yes, thank you. And one more, just an addition. See, the penalty proceeding basic criteria should be, there should be some sort of intention to hide the income, or like work concealment. The subject topic has changed from the previous concealment to now misreporting, though there are some minute changes have been there, definitely. But when there is no intention, as far as the SEC is concerned, to defraud or to reduce the or misreport or conceal the income, such initiation is actually bad in law. Such type of penalty proceedings, because normally it becomes a stereotype mechanism. Last line में आप ऐड कर दिया कि section 271 है, penalty initiate कर दिया, जैसे 271C था पहले, ऐसे 271A को डाल दिया उन्होंने. So that rather they don't go on the merit of the matters, and they just go on rampantly writing this last line, initiate the penalty under 271A. That's it. So issue no show cause notice for 271A. What is the logic for these things?
Sir, we cannot stop the AO, sir. AO will do, definitely will do. We cannot stop. But in the appeals, you have always better chances.
Yes, sir. Okay. Thank you, sir. Thank you. Very nice explanation by you. Very exhaustive. Thanks a lot.
Thank you, sir, for answering the queries. Now I request our past convener, sir, Nikunj Bangaria, sir, to please present vote of thanks. Nikunj, sir.
Yes, madam. Thank you so much. It's a privilege to give a vote of thanks for our in-house study circle member, speaker, Bharatji. Very, very well-planned session. Thank you, study circle, for this. And Bharatji fantastically delivered, covering all the aspects of the section and peppering it with, sprinkling with real-life examples. And they say true wealth is not the currency notes or your bank balances, it's the knowledge that you have, and by that measure, Bharatji, apparently you are a very rich person. And thank you Unmeshji also for sharing his experience and enlightening us with his example, with his views. Thank you so much. Thanks again. Over to you, Sheetal madam.
Thank you, sir. For our second session, we have with us CA Shashank Sah as speaker on the very new avenue, rising avenue for chartered accountants, that is e-commerce. I would like to introduce sir. He is a founder of PSBS and Chartered Accountant Company, associated member of ICAI, a very tech savvy and interested in learning about new areas, currently pursuing CFA and LLB, an achiever who has received awards and accolades. He has worked with Doshi Jain and Company as an associate and has a rich and ever-enriching experience in systems and software implementations, along with being a virtual CFO for diversified sectors. His expertise in understanding complex metrics and the genesis of software errors has helped him to cater a wide range of e-commerce clients and have helped him that grow to a pan-India level. His experience in handling due diligence, internal audit, stat audit, management consultancy, and the list is huge for the large listed and unlisted entities across different industries. He has executed sell-side due diligence for multinational companies operating in 3 different geographies and sale for brands for listed entities. He has handled due diligence for pharma, testing and inspection and retail industry. He has provided internal audit management consultancy service to several companies across the globe, assisting companies in implementing and converging to new ERP, handle IT's GCS and system audits for clients across the several industries as already mentioned. He has already helped a global marketing firm in adapting Ind AS and Ind AS financials. He has mentored, delivered lectures, and has been chief guest at various colleges fest involving fintech and e-commerce, is a regular contributor to our CA newsletters and financial blogs. Indeed, we have the speaker who has very in-depth knowledge and a practical exposure on our subject. Sir, please proceed us with the session, sir.
Thank you, Sheetal madam, for the warm introduction. Thank you, Bharatji, for the lively session on the penalties provision. I'll just share my screen. Let me know if it is visible. Is it visible?
Yes, sir.
Yeah. So starting with the e-commerce industry, the e-commerce industry is basically just we have all used the e-commerce platform in the last 2 years extensively to order something or the other. Apart from the current generation or the millennials and the previous generation have started using ordering through the e-commerce platform. I've seen my parents making the list of the groceries on the platform and ordering them in this lockdown. So e-commerce industry as a whole has grown substantially. It is one of the things which many clients are coming up with. I want to go online. My business is going well in the retail sector, in the wholesale sector, in the traditional manner. But we have been coming across with the clients who wants to grow their business into e-commerce sector as well, along with the traditional businesses.
So it is definitely one of the upcoming areas for all the chartered accountants who are already having the clients, and also the for CAs who want to get into a new domain as well. So I'll just try to give you an overview how the industry is working, what are the key challenges we are facing, and what are the opportunities we are having. So moving into the e-commerce, I'll just try to focus on this key 6 areas, how the e-commerce industry has evolved into India, what were the key milestones we have achieved, what are the benefits of getting into e-commerce, and how what are the key operational challenges, accounting compliance challenges, and what are the opportunities for each of us as a chartered accountants. So moving into the e-commerce industry evolution, the e-commerce was introduced in India in 1995. The first year when internet was introduced in India. Talking at a world level, it was started in 1991, at the time when internet was unheard of in India. But the e-commerce got a major boost with the launch of IRCTC website in 2002. It was the period when the consumers at large started to believe that something can be done online as well. We can do something productive with the internet, with the launch of IRCTC website. The period from 2002 to 2012 saw the dominance of online travel related e-commerce. So it could be booking of hotels, booking of tickets, booking of flight tickets. It was handling the major, it was contributing to the major share of the e-commerce for the decade from 2002 to 2012. Then in 2013, Amazon came to India, and it led to the shift from travel related e-commerce to growth of online retail, wherein directly B2C goods were being transferred, being sold online. Post 2018, now we are in a stage wherein almost everything can be sold online. We have whether it could be a service model, it could be a fintech, it could be a financial service, it could be goods. Each and everything is now available online. So even this is just a snapshot till date what we have achieved. Moving forward, how we have achieved in terms of numbers. Right from 2014, which was 14 billion USD, we have moved on to 84 billion USD, which is near about close to 6 lakh crores rupees in FY21. So this is the total volume size of the total sales volume of the goods sold over the e-commerce platform. In the next 4 years, even though we have reached an annual turnover of around 6 lakh crores, in the next 4 years, it is expected to rise to $188 billion, which is equivalent to 15 lakh crores per annum, which is further going to increase and reach a benchmark of 200 billion USD in the year FY26. So with a CAGR growth of around 22%, e-commerce industry is going to take a big leap in the next upcoming 4 to 5 years. And as a professionals, it is the right time to get into the market to capitalize on the early growth, which we are going to see in the next 3 to 4 years. So now, e-commerce industry, just how the sector is being classified. The sector is classified into 4 major areas. First one is the B2B commerce, or the business to business, which could be your India Mart or the Amazon business, wherein they're directly selling it to the businesses. They're not selling it to customers, but one can buy from them and use in their business or sell it ahead. Then business to commerce, the classic examples include Flipkart, Amazon, wherein they directly sell it to the consumer who use it for the end use purpose. Third category is the consumer to consumer, wherein the e-commerce companies act as a platform and this customer directly deal with one another. Classic example for this is Quicker and OLX. The last category is consumer to business. This is the reverse model wherein consumers sell out to the businesses who then sell it out to other customers. So example of this being the Shutterstock, wherein independent artists can sell their photos, images, artworks to Shutterstock, and Shutterstock can sell it to the users at large. Getting into benefits, why we should, what are the benefits, why anyone should get into e-commerce. As of date, e-commerce is not a luxury. It has become a necessity for the businesses to survive and sustain their businesses. The trend for Tier 1 cities is even when the goods are available next door or even at a walking distance, people tend to buy online and get it delivered over here. This trend is already shifting towards Tier 2 cities and the Tier 3 cities. So every business which has a physical presence is now is not an option to not have an online presence as well. So the key benefits which we can determine for the businesses is store and the product listing creation. So basically in the online store, you have option to create a listing for once. Once it is done, anyone can go and visit your page and get all the details required for the products. Business owners do not have to spend the time or do not have to engage manpower for doing a repetitive work of explaining what are the benefits of this thing or what are the features of a product. A classic recent example which I faced, I visited IKEA and they simply told me, sir, you can check on the website for the product, you can find all the details, and then you can order and you can pick it up from here, or you can get it delivered at your place. So people are using the e-commerce platform as a brochure for giving out the details of their products. It helps in cost reduction comparatively. So as a normal business owner or a brick and mortar store, we have to incur cost to maintain our stores, pay out the rents, maintenance, electricity, warehouse charges for storing our goods, and keep it up to date as well. While shifting to e-commerce, we eliminate major of this cost. We do not have to maintain a store. We do not have to pay out the rent for a storefront. It is being handled directly by the listing which we create over the e-commerce websites. Affordable marketing. So for a brick and mortar store, where normally the objectives and the advertisement models previously used to be a billboards, brochures, advertisement in newspapers, getting sale offers, sale posters in front of the stores. All these advertisement methods, though effective at a small scale, it leads to a restrictive audience. You can only target the audience in your city, in your locality. But with online marketing through the e-commerce websites, you can reach out to the customer at large. You can spend out money, if properly spent, it could reach out to people across the country. You can target the relevant customers as well. So at a lower cost, we can go for a higher reach in the market. Again, going to the reach limitations. With the e-commerce websites, your geographical restrictions is taken care of. You no longer serve only a particular city, a particular state. You can sell your product across the country. By sitting in Mumbai, anyone can sell a product right from Jammu and Kashmir to Kanyakumari and right from Gujarat till Assam. Anywhere, in any corner of the country, you can sell your products. Again, there are faster response to the market demands. If you properly analyze the market demands, we can get to analyze the trends. Suppose there is a peak wedding season coming out now. we can arrange our products, we can market our products in such a manner so that we target out to the customers, we can reach out to them earlier. So if we analyze the trends, we can move in that direction as well. And it gives the customers and both sellers and buyers an option of several payment options. So now you are not restricted only to cash or card mechanism or at stores. You can easily give out your customers as COD. You can give out EMI options. You can give out card payments. You can give out offers on the links on various cards at one place. Okay. But speaking about the benefits, if you see, I've marked a small asterisk over the benefits. And this benefits basically comes with certain conditions, and not every, while theoretical, these are the benefits, but not everyone in the e-commerce industry is able to take the benefit of this. So next, I'm going to run through you the key challenges in online selling, which a small business owners face. Getting registered on any e-commerce website is a very simple 10-minute job. You just have to provide your business details, upload your product GST details, and you are live on their website, ready to sell. But the next challenge comes in when you have to start with your product listing and the store creation. You will recall, if anybody has seen, there are two different types of pages on a e-commerce platform. One wherein your product appears with, along with several other products of other competitors as well. So, and if you are selling a product A, there might be other players or the other customer, other suppliers who would be selling the products of the same description, same types, and it might be possible that a customer who has come to look out for your product might see other competitive price and go into buying into those products. So there is another concept into e-commerce platforms wherein you can create a storefront. If you see any of the top brands like Puma, Nike, they have a specific storefront. So if you select Puma shoes, open a listing, and it has an option, visit the Puma store. Once we click over there, it takes to a independent storefront, which is specifically designed only for Puma, wherein you get to see all their models, order deliveries, whether it is shoes, sneakers, or accessories, everything is listed in one place. So the next challenge with the for a new seller getting into e-commerce is what are the details required to get my product listed. For example, on Amazon, you have to provide details in 110 columns for each single product. Right from their manufacturer details, brand name, their title description, their sizes in centimeters, inches, their weight, their mode of delivery, what are the contents, and what will be the pricing, what will be the pricing on offer, what will be the MRP, which location we are serving, which location we are not serving. It takes nearly 100 to 110 columns for each product. So it is a challenge for each of the small new customer who are into a mindset कि I just bought this product, मुझे 5 चीज पता है इस चीज के बारे में, I know the 5 features, I could sell it out to anyone. But getting onto the e-commerce, you have to fill all those details so that your product is properly ranked and properly listed. Another challenge which we face is how we can create a separate storefront for our brand so that customers do not go to the other competitors and buy their products by searching our products. So it is there are challenges over here ki how to design those pages, who can design those pages, how much I have to pay for photography, what is captivating to the eyes of the customers. Again, entire algorithm of the e-commerce sites is based on keywords, because hardly anyone goes and search for a specific item or go through to a link. Whenever we are buying through an e-commerce website, we search for a keywords or for a look-alike item. So if I'm having to buy a mobile, I'll search mobile with good camera. If I'm buying a laptop, I might put in a brand, Dell ka laptop for with this size. So these are the keywords. As a business owner, it is a challenge for them to identify which keywords best describes the product, which keywords helps them to come into the picture on the first page, on the listing page. Again, whether the title and the description which we are providing for the products, whether it is an appropriate determination of their products. Because if we misrepresent or if we give a wrong representation, there are high chances that the customer, after getting the product, will return the product, will report our goods, and it might happen that our ratings might go wrong, and or the suspension of accounts as well. So it is very imperative that we, while creating the product listing, the product descriptions are appropriate. We have around Amazon gives around 1,000 words, 1,000 characters to write a description for the products. So it needs to be ensured that we are advising our clients to give a proper description using the entire bandwidth which we are having with terms of number of characters and uploading the products. Also, quality of photos. Anybody going into the e-commerce platform for buying categorically makes a judgment on 3 top criteria. First is photo, whether the product is appealing enough. The second one is the pricing, whether the whether it is properly priced, and the third one is ratings. So while making a product listing, we need to ensure that the product meets the guidelines of the e-commerce platforms. It meets the customer. We need what we basically do. We take a customer feedback as well from the key sets of customer. How does it find appealing to you? Whether you will buy clicking on this link. So which is a challenge for sellers, which we can resolve by giving a proper guidance to the sellers. Again, the next benefit was cost reduction. So we discussed that we do not have to maintain our store, we do not have to pay rent, we do not have to pay for holding out the inventory for a long time. But does that mean there is no additional cost linked to while selling to on the e-commerce platform? So there are several cost elements which are associated with selling online. The first one being the referral and the commission fees. So whenever we are selling, anyone selling on the e-commerce platform, they charge around 3 to 18% of the selling price as commission for selling on their platform. I'm sure everyone must have seen ads these days of Meesho advertising that you can sell at a 0% commission. It is a mechanism to acquire sellers to sell on their so Amazon and Flipkart on an average charges 3 to 18% depending upon the product category. So it might be higher for your product, it might be lower for someone else's product. So first cost which we incur is commission and the referral fee. Another is inventory holding charges. We are not holding the inventory in our warehouse. We are not incurring the cost here, but we need to make sure that the required inventory are available at the e-commerce platform warehouse so that orders can be dispatched as and when it is received. Okay? Because delay in supplying the orders gives a bad feedback on your supplier ratings, and it will impact the ranking going forward, which will impact the sales. So whenever we are supplying it to Amazon or Flipkart to hold our inventory, they charge inventory holding as a depending upon the size of the products, how much space it is acquiring in their warehouse. So inventory holding charges is another charge which we pay online. Shipping and the reverse shipping charges in a classic brick and mortar store, shipping is never a concern. The customer comes to the store, they pick the products and go. But in the online model, we need to ensure that our products are priced so competitively that even after including shipping, we do not we do not go ahead of the competition. So shipping is another cost, additional cost from the previous model, which we incur. Another thing, I think everyone here must have sent out return the goods at least once. So whenever we return out the goods, it happens as a seller, we do not get anything, but we lose twice on shipping. So reverse shipping charge is basically charges levied on returning the product back to the seller. So if we sell out a product of 1,000, and if there was a shipping charge of 100 associated with it, and the customer has returned the goods, so our sales effectively would be 0, but shipping charges would be 200 rupees. So we have to ensure that we are mapping the returns as well. We are mapping the products in such a manner so that the returns are reduced to the minimum, so that we can optimize on the reverse shipping charges. Next is packaging and pickup charges. Now when the goods are getting to the customer in a packed manner, we need to ensure that the packing is of such a quality that it does not get damaged while shipping. You might have come across several reviews like the product was packaging was damaged, packaging was open, it was torn. All these things impact your seller reviews and impact your sales. Another also currently the e-commerce websites handle the packing and the pickup charges. They supply them with their own customized packages, which you pack the goods, and they pick it up from your warehouse or wherever you have your dispatch address. So they charge a separate fee for that, for providing you with your packing materials and for picking up from your stores. And the technology fees for each order. The e-commerce websites charges a particular fee for letting them use your platform, letting them use your technology for order management, for shipping management. So effectively, as a experience, we have noted that e-commerce platform nearly take about 30 to 33% of the total selling price as their charges. So currently, if you are selling a product at 1,000, near about 300 rupees will be charges of the e-commerce platform, and you will be paid around 700 rupees as a net realization. Another thing, affordable marketing and advertisement. We can reach out to multiple people with a wide reach, but the key concerns over here is how are my online ratios converting? Traditionally, digital marketing ratios are for every 1,000 customers who have viewed your advertisement, only one will buy. So it has a conversion ratio as low as 0.1%. So we need to ensure that when we are advertising, we are targeting the right keywords, which ensures that we are converting those customers. We are just not burning out money on advertisements, but we are increasing our chances of conversion. Also, we need to make sure that the cost is lower than the sales we are making. It should not be like that. We have spent out 2 lakh rupees on advertisement, and the net sales which is coming from the advertisement, or the net profit which you are making from the advertised products, is lower than 2 lakh rupees. So effectively, we need to analyze whether by going into this advertisement, at least in the long run, we are making more money than we are spending on it. Again, we need to look out for the competition in the advertiser space as well. Paying out money for advertisement does not ensure you that you will be listed on the first page. For a classic web page experience on the e-commerce website, there are around 60 listings, out of which 48 listings are such that those are organic, which are not sponsored, and there are only 12 listings which are sponsored. So if there are hundreds of marketers, hundreds of product sellers in your domain, which are out of which 10 are marketing their products, so it is highly likely the first page 12 people would be the one who are paying higher, and if they are paying lower, it might be that we will be in page number 4, 5 or later. So this means that even though we have spent out money, people are not coming and viewing our products, and the only person who is benefiting from them is the e-commerce companies, because they take out the money even if the sales does not come in. Again, no reach limitation, we can reach out, there is no geographical boundaries, but the key challenges is the visibility is given only to products who are on page 1 and page 2. You can check yourself, when was the last time did you move out to the page number 4, 5 or later for checking out a product? Maximum, we move out to page number 1. If we are not satisfied with the products, if we are not able to look for a specific brand, we move on to 50% of the people move on to page 2, and hardly 10% move on to page number 3. So we get visibility, we get no geographical restriction only when we come to page 1 and page 2. Okay? And to get to the page 1 and page 2, we have to ensure that our session time is increased. We have to make sure that we are getting visible to the customers. Even if they don't click, if we are targeting the correct keywords, we are having the correct SEO. Even if our products start appearing on a regular basis, our rankings improve. Another thing to move out this limitation is to check how many orders to review rating conversion is being happening. So even if we are selling out the products, if we happen to sell out the products, but we are not able to get a proper reviews for the system. One of the critical things which the people use for buying is review or rating. If I am seeing a product, let's suppose of 5,000 rupees, with only 10 reviews, and a product of 6,000 rupees with 1,000 reviews, I don't mind spending out 1,000 more for a product which has been tried and tested for by a higher number of people. Then going on for a cheaper model which has not been properly reviewed, which has not been used by the people. So it is very important that once we start getting orders, we need to start converging into reviews and ratings as well. Again, multiple payment modes. We can get the multiple payment we can use multiple payment modes to get a payment, but we need to understand when that money is coming back to us. In a normal retail store, you get the payment immediately. Even into e-commerce customer, as of changing trends, majority of the payments are being done online, and the payment is being done immediately. Even the cash on delivery gets collected in 2 to 3 days. But the payment cycle of the e-commerce platform is a challenge for the customer sellers. So even the e-commerce platform which have collected the money on our behalf, they do not pay to us on a daily basis. We do not get the money at the end of every day end. It takes normally 7 to 14 days from the completion of the orders to get the money into our bank account. That too subject to holdback amount. So they have a certain formula wherein to reduce the risk of paying back for returns, they hold back a certain amount. So even if you sell out of 1,000 rupees, they are not going to, even after 14 days, they are not going to pay you 1,000 in full. There will be some holdback amount which will be kept in reserve, which will be paid after the return cycle has been completed. Also, reconciliation of the payment to sales. I have seen many customers complain, many clients complain basically, the platform is showing that I have sold sales, I have done a sales of rupees 10,000 in the last week, or let's suppose 1 lakh in the last week, but I have received only 50,000 as a payment. Where is my other 50,000? So it is very critical to reconcile all the payments. So Amazon e-commerce platform basically keep on hold for their the charges they deduct upfront as and when the sales are made. They keep a track of the reserve amount or the holdback amount, and then they give out the payment. So one of the key challenge for the business owners is why I'm not getting the exact money what I'm selling. They track many people get happy कि आज 10 lakh का sale हो गया, but I've seen people coming 1 week later कि 3 lakh rupees क्यों आया. So it is very imperial to reconcile the payments to sales. Now coming to the accounting and the compliance challenges, these were majorly operational challenges which sellers are facing. Now coming to the accounting challenges, accounting for sales on the e-commerce platform has changed the dynamics how the accounting is being done. Traditionally, businesses have always been, and definitely the large wholesalers or the distributors who are getting into the online for the first time, it is a rapid change of accounting from them. They used to sell out 10,000 units in a single unit invoice and make 10 such invoices, and they are done for the month. Now, to sell out 1 lakh units in a month on an online platform, they have to book 1 lakh, technically around 1 lakh entries of sales in their books if they want to maintain proper inventory-wise details, which is a new concept for them. They are not into accounting each and every single invoices at one units. Sorry. So there are several softwares which, as a chartered accountant, we can help them to record their sales in their accounting softwares. Again, managing inventory movement across the multiple warehouses. So when a person starts selling online, we determine what is the best place to sell from, so that we can reduce on the shipping cost, we can reduce on the logistic time, so that the customer gets a better experience. So now if I'm getting for my products, I am having a warehouse in Mumbai, but the majority of the orders is coming from the East. It is beneficial for me to open a warehouse in East and sell it from there to save on the shipping cost. So how I am managing the movement from one location from in Mumbai to the other location, say in Kolkata, because it involves your GDN and the GRN concept, making of E versus e-way bill for internal movements as well, which was not the case previously. Previously, I was directly issuing the sale invoice and getting the compliance done. Also, mapping of refunds and returns. The e-commerce companies in India are majorly customer-centric. So if you have received the wrong product, and if you as a customer complain it to the e-commerce companies, we have to that we have received a wrong product, they will immediately issue a refund to you. And in many cases, the goods are not returned as well, or goods are returned after a period of another, let's say 15 days, 20 days to the seller. So as a seller, you are losing out on the funds immediately, but you are getting the product back after 15 days, which in a normal retail store you get back immediately, and you could have sold it the next day itself. Now we are on a e-commerce platform. I have to wait for another 15 days to get my product back. I have to issue out the refund immediately. So my payment cycle just went to for a zero product, zero sales. My funds are blocked for 30 days. And there are many cases wherein the goods are not returned as well. So if refunds are issued, but I'm not getting the product back, so it is a complete loss. I'm not, the sales are zero and the goods are lost as well. So it is very much required that we keep a proper track of which orders have been refunded and whether that returns have been received or not. Again, booking of expenses. Amazon or the Flipkart charges multiple costs, which we discussed earlier, multiple heads, and they issue a separate invoices for each of those charges. We need to ensure that it is properly booked, the TDS is properly deducted on those things, and it matches with my online statement. So all the charges, verification of the charges. So all the charges which are levied have a certain formula behind it. So suppose if when I'm telling that 10% of my selling fees will be charged as service charges, or when you're supplying goods of 1 kg, 50 rupees will be charged as shipping cost. Many a times we have noted that due to the increase in volume, there are errors in the calculation by the e-commerce companies. Based on an estimate or a market research, yes, there is on an average 5 to 6% errors into calculation of these charges. So we can track those charges, we can calculate whether it is determined correctly or not, and we can claim it back from the customer. Sorry, from the e-commerce platforms, so that we do not incur any wrong charges by selling on their platforms. And again, reconciliation of sales and payment, which we discussed as a payment challenge as well. Coming to compliance challenges, the first thing is TDS deduction and a payment of the charges level. So whenever we sell on the e-commerce platform, what happens if we are selling at 1,000 and the 30 rupees is the expenses. So the e-commerce platform will issue an invoice of 30, but they will deduct the entire 30 rupees upfront. As an accounting practice, when we record those expenses, it is our liability to deduct TDS on that amount and pay the remaining amount. But in this case, entire 100% of the bill amount is already been paid. So now we have to deduct TDS additionally, which is an additional cash outflow for the companies, make the payment. And then after 3 months, when we are filing the TDS return, getting the form 16, we have to submit it to the e-commerce companies. See, this is your, this we have deducted TDS on your expense. This is the form 16 for that. And now reimburse the TDS portion of the amount. So from the compliance perspective, we need to make sure that every bill we deduct the TDS, we make the cash flow. At the end of every quarter, we file the returns, and then we ensure that we file the form 16 to the portal so that we get the money back. So effectively, you can say on an average, 30 to 40, your payment, TDS payment has an outflow of around 45 days on an average, the additional cash flow till you receive the money back. And many companies, out of ignorance or lack of knowledge, fail to deduct the TDS itself. So this gets disallowed as an income tax expense, while filing the returns. So to save out the cash outflow, it results into the loss of taxation. So next step is filing the returns and claiming the refund from the e-commerce websites. Also, e-commerce websites calculate GST on what basis the data which we feed. So it is very important to see that the GST rates are properly inputted. A classic example of GST error happening into e-commerce is on the apparel retail sector, wherein we have two multiple rates. So the person handling the e-commerce, for apparel retail, if it is less than 1,000, GST is being charged on 5%. If it is more than 12%, it is charged at 12%. So as a customer here, we need to ensure that the GST rates changes whenever the selling price move down less than 1,000 rupees, and it is calculated at 12% whenever it moves down to most probably this challenge will be completed when we start implementing the single rate for retail industry. Again, if the company e-invoicing and the e-way bill compliances, we need to make sure if the e-invoicing is applicable on the company as a whole, then it is applicable on my e-commerce sales as well. So we need to make sure that the settings are done in the proper manner so that e-invoices are generated automatically while generating the invoices from e-commerce portal. If we miss out on if the company as a whole is applicable for e-invoicing and we miss it out on the online portal, it is a non-compliance on the part of the company. Again, for IPR claims, there are many companies or many sellers who buy from your platform. You might have got an idea as well. So you buy something from Amazon itself, you buy and start selling it on Flipkart or start selling on with a different name on Amazon itself. So as a business owner, you can file IPR claims with the Amazon or Flipkart that this is my product. I am having a registered trademark for this. I am selling it out for this period. The company is selling it out. Another person selling it out is fake. Fake, and we need to get it removed. So these are the challenges, and as and when the challenges increases, as and when it is an opportunity for us to resolve those challenges and convert it into opportunities by getting those clients. Okay. Looking into the opportunities, what we can get from the e-commerce platform is we could handle the end-to-end e-commerce operation, right from their product listing, comparing the prices with the competitors, getting the calculation for what will be the best selling price, what will be the best keywords, handling their inventory movement, handling their accounts, handling their liaising with e-commerce websites, right from A till Z. We are as a chartered accountants firm, we as a person having knowledge about the client's business, we can help in end-to-end e-commerce operation. Another thing, we can design a separate SOP and controls which are quite different from the existing business SOP as a separate vertical. We can design those SOP, we can design those internal controls so that the company does not lose out on money, does not lose out on the inventory. And when we are merging it with the common company, it does not result into non-compliances. We can analyze data. We can use the data analytics so that we can identify the future opportunities for the client. So suppose I have got a data for 1 year, and if I am seeing major of the sales are coming from South, so the next year I can I can target this customer from South. or if I can see if in a seasonal business that trends are moving. So just in case of a rainwear, the rain starts early in Kerala. So I could start my selling from Kerala. Then as and when the monsoon progresses, I can start selling in other states as well. So this we can identify from the data analytics and help them to sell in a particular domain. We can help them into keeping e-commerce as a separate segment and keep the books and the bookkeepings and the compliances as a separate assignment. We can be their licensing partner for the e-commerce, for getting their compliances done, for getting the IPR filing, getting issues resolved, or other such things. So, in conclusion, I will say the e-commerce industry is on a verge of a major boom. The tier 2, tier 3 cities participation into this sector is increasing. The interest of business owners to come into the e-commerce platform is increasing. So we should make sure we capitalize on this opportunity and take it as a new avenue for growing our practice. Thank you.
Thank you, Shashank ji, for this wonderful in-depth session, traveling from each phase from the scrap to the final conclusion of this presentation. To present away the vote of thanks, I would request a very senior in profession, renowned speaker, and a very well-known personality in our Bhayander CP Study Circle, CA Unmesh Narvekar, sir. Please present vote of thanks for this session. Unmesh sir, are you there?
Yeah. Thank you, Ritu, and for giving me this opportunity of presenting a heartiest vote of thanks. Sir, let me present our heartiest vote of thanks to our speaker, Shashank Sir, for such a nicely deliberating with the subject of e-commerce. Now, the entire detailed aspects have been dealt with by you in individual manner. Let it be regarding the scope, let it be regarding the activities, let it be regarding the compliances, finances, and many other points which are really worth knowing for the chartered accountants. Now, as far as the scope of chartered accountants, role of chartered accountants is concerned, we can say definitely it's a very depth thing what we can take into this activity. As finance is required for any business, but where we stand, that you cannot know unless you know the accounting, if you have done the proper accounting matter. So accountant, and when you talk about the accounting or accountants, yes, there's a chartered accountant is the real right person to deal with this thing, but not restricting the scope of chartered accountants to the accounting part or auditing part, which is a traditional activity. E-commerce has given us an immense areas where we can deliberate on, we can work on, we can take the professional opportunities in this course. And you have dealt those subjects very nicely. What way the chartered accountants can be in handholding to the e-commerce operators, right from the conceptual level of idea, then projection, making the projection for them, then definitely the accounting, taxation aspects. Because if you see the costing plays a very vital role, and there is a minor change or many mistakes in costing may take the entire profitability here and there. Similarly, the compliances, the tax compliances, then other compliances are very important to deal with these subjects. And I think the chartered accountants can play a very pivotal role in dealing with these subjects. And you have taken the areas in a very detailed manner and where the professional approach lies for chartered accountant. In the digital area, especially the commerce, I think 50 years, sorry, not 50, but 30, 35 years before, when we studied the commerce, this business commerce in our 12th standard, we had heard about the basic commerce, but now the era has changed to digital commerce, e-commerce, and whatnot. And world itself is now within our coverage that you can deal with the world. And such a large level, if you chartered accountant wants to play a role, then yes, he has to increase his own wings also. And that is where you have dealt the subject in a very different way, not only with the general e-commerce as such, but along with that, what are CA's business or opportunities in this enterprise. Sir, thank you very much for your spacious time and giving the detailed presentation on this subject, and you taking our entire fraternity in a very different level with this discussion. Thank you very much for this. Thanks a lot. Yeah, over to Sheetal.
I request our convener madam to say closing remarks for the seminar.
Thank you, everyone. I especially thank Shashank ji and Bharat bhai. And I have one announcement or request, whatever we can say this. Members, as you know, Vasai branch election is there on 29th January at Vasai branch premises. Therefore, I request you, each one of you, to cast your valuable vote in favor of our profession. So please go and cast your precious vote on this Saturday to take our profession to a new height. Thank you so much, everyone. Thank you.
Thank you, members. That's all for the day. Thank you for being here.